I think there is no manual for doing business right. Sometimes you can do everything right, and the business still won't survive and wouldn't make profit.
At what point would you compromise?
You know, there is something I've realized with business and customers. Don't be desperate. You see, there are customers who have audacity. They feel they are so entitled in your business, and they think like you're supposed to kubembeleza them to buy from you. And then I tell you a tray of eggs is $3.90, and then you come and tell me you can sell for me at $3.70, and then I tell you, no, I've written there, like you can see it is $390. So you are like, okay, kama uniuzi $370 wachani. You know, on my side I'm making a loss, so that I can keep you. Yeah, don't be desperate. Set standards in that business. Wakufika atafika. At the moment the customer realizes you are desperate to make those sales, they will take you down. Yeah, as long as you're confident about what you're selling or the service you are giving out, set those standards.
So, welcome to this episode, another episode of Joseph Haemba. And this morning we are privileged to have our guest today in the show. I'm going just to introduce her to you, and then before I tell you what we are going to talk about today. Caro, wacha niseme tu iwe kwa ufupi. Please introduce yourself to our viewers.
Okay. Yeah. I'm happy to be here today. My name is Caroline Mutinda, and I'm a business owner here in Nguluni. And I'm here to talk about cash flow and profit in small businesses.
Thank you so much. So that is, as you've heard, today we are going to talk about cash flows and profits in small businesses. And this goes to a very wide audience, because I believe in this country especially, majority of people are involved in the small businesses. So this conversation today should be very, very crucial and very important to our viewers, so that you get to know and understand the difference between the two, cash flows and profits. So Caro, thank you so much for honoring our call to come to our show. And please, this morning I would want us to differentiate between the two. Most people do not understand what it means by cash flows and profit. What is the difference, and how is it very relevant to people who are doing very small businesses?
Okay.
Yeah.
And thank you. First of all, we are going to tackle the cash flow, which is the main cost in business. So in that context, I'm going to speak about the meaning of cash flow in business. Cash flow is the actual movement of money in and out of business in a specific period of time. Okay. Yeah. And in cash flow, we have what we call cash inflow.
Cash inflows.
Yes. Cash inflow is the money the business receives. And that money comes from the sales you make in the business, the repayments you get from customers, and also you can receive money in business through acquiring loans. And then we have cash outflow. Cash outflow is the money you pay out of business. The money you pay out of business comes in form of the rent you're paying for your business. That's the premises where you're doing your business. Then we have some small business where the owner has employees. So the money you pay rent to those employees. And also we have utilities. Utilities is things like electricity, water. We also have taxes. You can't run a business without business permits. That's where the tax comes in. And then we have business have a lot of bills to pay. So now that's the cash outflow in business. That means the money you're taking out of that business to cover the expenses of that business.
Okay.
Yes.
Very crucial. So you talk about two very important things in that in cash flow. You talk about the cash inflows and cash outflows. For someone to understand these things, you have even given examples of the outflows. You've given the example of rent, and then the inflows. You've given the example of sales. I think sales, yeah, and the money may be owed to you by people who taken things or products on credit.
Yeah.
So those are your sources of your cash flow.
Yes.
Yeah. So then, for someone to who is in a business, that small business, and wants to understand, sometimes you are just beginning a business, and maybe you don't understand pretty much about how much cash flow you need to have in the beginning. How is this very important for a person who want to start, so that he is able to run a business as he waits for break-even point? Because as you start, you will not be able to make profit immediately. So how is it very important for somebody to plan to have enough cash before you start a business, so that you don't run out and give up on your business before it starts making profit? Yeah.
Okay, I'll say if you are starting a business, you have to have an idea of what you want to do, right?
Yes.
Yeah, I think in business, the main thing is the idea of what kind of business you want to do.
Yeah.
And then after you have the idea, you're going to draw a plan. Yeah. Different businesses have different starting capital. So it depends on how big you want to go, or how small you want to go, or where you want to start the business from.
Yeah.
So that way you will plan. I want to start, let's say, for example, I'll talk about starting eggs depot, for example. The first thing you're going to plan, it's the market. You have to find a strategic place where you're going to do your business. So first, you're going to, after you have identified the market or where you are going to set that business, now you start looking for a premise or a shop. So that way you will weigh options depending on the amount of rent. So there you will break down rent and like the stock you want. Like let's say, for example, how many trays of eggs do you want to start with? Is it 100? Is it 200? Is it 1,000? So depending on the number of trays you're going to start with, they vary, because a person who starts with 50 trays they are not going to have the same amount of cash with a different person who starts with 1,000 trays. Yeah. So I think there is no specific amount or money you are supposed to have when you start in a business. It depends on the kind of business you want to do. And then after you planned that, you can't start a business today and expect the business to be making profit by tomorrow. You have to have strategies. That's why you're saying, like, you have to prepare yourself and say, I have around, say, 100,000. So I'll start my business once I pay rent. Like basically, when it comes to rent, if you had planned for this, it's good to pay maybe a rent of maybe 3 months prior. That way you'll be able to stabilize that business in a way that for the first 3 months, any amount of money you're making in that small business, it goes back to that business. You can't start business today and you're depending on that business to cater for your personal expense. So first you have to grow that business, maybe in the first 3 months or up to 6 months, without depending on that business. Then from there you will see you have given your business enough grace period to know if this business is making profit or it's making a loss, or if it's growing or it's not growing.
And it's also good. It's also good for people to know that different businesses vary in terms of that grace period.
Yes. Yeah.
We have those will peak in 3 months time. Those will peak in 4 months time.
Yes.
Even some goes Can they
Even
go
a
to
year,
up to?
and the business has not peaked. So
Yeah.
yeah, that's dependent on the kind of business you're doing. There is a business you open today and it just peaks in the first week.
Yeah.
There is another one you'll have to wait a month, another one 2 months, another 3, and another one you'll even go a whole year. The business has not peaked. You'll have to close it.
Okay.
Yeah, because a year it's a lot for you to run business, and you're not seeing a difference. You're not making profit, and at the same time, you're not even spending the money you're getting from that business. That's why you find sometimes people are running business, and you're going in your pockets, to cater for that business, to pay rent for that business. So I think sometimes the minimum a business can do for itself is being able to pay for its rent. Yeah. If you are running a business and it can't even pay its rent, I think that's the wrong business, or maybe you're doing it wrong. And I'll also say, sometimes I think there is no manual for doing business right. Sometimes you can do everything right, and the business still won't survive and wouldn't make profit.
Okay.
Yeah.
So that's a very big statement.
Yeah, because a business is affected it's not only you who is the owner of the business.
Factors,
There are other factors, other forces that affects the operation of a business, even the environment you're doing your business in. Yeah, affects even the economy, inflation. It affects the business. So it's a lot. There is the internal forces and the external forces that will affect your business, its growth.
There is this notion of among entrepreneurs, there is this notion of if a business can be able to run for a year or 6 months, then it's a serious one. How true is that statement?
Come up again.
There is this notion among entrepreneurs that if your business can be able to start and run for at least 6 or 1 year, then that business can survive.
Okay, I think that it's deep. Now we go back to cash flow in the business. So I think cash flow is the main thing in the business. Cash flow in business is what determines if this business can pay its daily expenses. Rather than figuring out if this business is making profit, you have to track its cash flow first, because a business can't grow without cash flow. Yes, because you need this saying, this notion people say you need money to make money. And if that business does not have money, does not have enough cash flow, that means you don't have money to purchase products for that business. Whichever the business you're running, you need money to restock, right? So I think the main thing you have to control is, if you're able to control cash flow in that business, you're good to go. Cash flow, it's the main thing. If you master the cash flow, your business has high chances of surviving. Yes.
Then for business owners who maybe started and then they are in between, you have a problem with both profit and cash flow. What should worry you so much than the other between the two as a business person?
The cash flow.
The cash flow.
That's why we have said you can start a business, but it takes time for this business to make profit. But you have to manage to make sure. That's why when you starting a business, there is the starting capital and the operating capital. Like you have to say you have a budget of 200,000. You can't invest the 200,000 in that business. You have to invest around 150,000 and remain with 50,000. That will be the operating capital of this business. Like you can't empty your pockets. Pesa yote yenye ulikuwa nayo umeweka kwa biashara. You need money to operate this business. That's the operating capital. Yes.
And there is also some small business people, let me just call them generally business people, who operate on a daily basis. As long as today he has operated a business and he has made, let's say, 2,000 shillings, the person will maybe spend that money either on his personal expenses or to the business and completely deplete it. And as long as he's sure tomorrow the business will be able to generate another cash, he has no problem. How important is it to tell this person that it is safe for you to have to have a net, some kind of safety net, so that you are able to run, you are able to sustain your business in future? How often should he be able to check this amount of money or cash flows in the business? How often?
Okay, I think from your question, I'll say people do business for different reasons. There are people who do business for survival.
Okay.
Yes. Doing the business for survival means, I'll give you an example of a place I buy groceries.
For instance, let me cut you there. Is it good to do business for survival?
That's why I've said people do business for different reasons.
Yeah.
There is someone who wants to grow. Okay. But there is someone who mwenye amekosa employment.
Okay.
Like they are like, I have my 5,000 here. Let me just open a business. As long as that business can cater for my daily needs, okay, I'm good to go. That means once every day you make 2,000 shillings, and maybe you pay, say, 1,000 for where you took the raw materials or the stock from. Now you have 1,000, and then the 1,000 you have remained with, you say this 1,000 I'm going to pay to semi a chama, I'm going to buy food with it and other basic expenses. Now your 2,000 it's over. That day you are satisfied, you have covered your needs. Now tomorrow you'll wake up and deal with another problem, which is you just go to your supplier, wherever you get your stock from. Then you ask for the stock on credit. You come and sell your things. You go and pay them in the evening. The remaining amount of money you have, you deal with other personal expenses. That's doing business for survival. This person is not targeting growth. That means they don't even keep track of their expenses, of their sales or anything. As long as their daily expenses are covered with that business, they are good. Yes.
Okay.
So that's why I've said it depends on why you're in business. But that's wrong, because if you're doing business for survival, that means that business will never grow.
Yeah, it will remain small.
Yes.
It will generate the same amount of cash flow.
And that's, I think most of the small businesses, they have that problem. That's why I was saying, like, for example, that place sometimes I buy groceries, like that mother tells me, umefanya vizuri hata ukakuja, hata sikuwa nimetosha pesa ya unga, hebu uchukue nyanya, kitunguu and all that. Okay. Unaona, like that kind of a person, okay, like they don't care about tomorrow. Tomorrow will take care of itself as far as the business is concerned. The only thing she's concerned at the moment is selling this nyanya so that pesa yake ya unga can be enough for today. Yes, and I think it's wrong for you to grow in business. You need to have a plan. And I also think the place we have now with inflation and the economy, it's good to have multiple sources of income. Depending on one source of income, it's going to be challenging, especially when you're doing business, because it means everything, your life is dependent on that business. Every expense, every need, you're depending on that business. That means you are draining this business. Yeah, and the more you drain the business, that means you are going to have a negative cash flow. And since the cash flow determines if this business will stay in operation, chances of doing this business for a long time, they are going to be very low. So it's but in life you have to start somewhere, and also that's why we have loans. You know. And the main thing is financial discipline. If you don't have financial discipline, you can't do business.
You'll run out of business.
If you have impulse buying, the way I was telling you earlier, sometimes you find that you're doing business, and once you see someone selling eggs, you call them, unagongewa moja, unachukua pesa ya kazi. You see another person selling smokies, you call them, you buy, you take that money from the business money. So I think you're supposed to separate business money and your personal money. They are not supposed to be one and the same thing. So if you have your personal needs, you are supposed to have an account for that. And the only things you are supposed to spend business money on are the things which has to do with the business, not buying clothes for yourself or any other expenditure which is personal, which is different from the business. So you have to separate and balance these two for your business to survive.
Thank you. I think you also add something there, because sometimes many people confuse, like we said in the first statement, people confusing. If you have a business, you are not treating it as something you own. You remember, you have to also realize that business, you and the business are two different people. As much as you benefit in it, you should also benefit from you. That in terms of managing it properly and letting it also grow. Imagine having a human who is not growing, both physically, financially, and all those facets of growth, they are not being seen. Then it means there's a problem. So a business where you are siphoning a lot of cash flow, you are taking a lot of money from it, and then you are not expanding or doing anything to it, you expect nothing from it. So let's move on cash flow again, because you said this is very important to the business. On cash flow, is it true that even if a business is generating cash flows daily, is it true that it is also possible for this money, however much it is it true that it's going to deplete or run out at some point, even if you are generating enough?
I think no, I haven't understand your question.
Yeah, I'm asking, is it true that even if you are generating cash flows, there is enough of it from, let's say, loans, sales, the people are paying back? Is it true that the same money, if not well managed, there are ways through which it can go completely run out of it?
Yes.
Okay.
Yeah, the business can have a positive cash flow. That means you're making good sales, the business is thriving, everything is good. But the way you have asked, if you can, the business can be doing good and eventually you close it or it dies and all that, that's possible. That's why I've said financial discipline, being able to track your expenses, your daily, weekly or monthly sales. Yeah, that's what's going to enable this business to thrive. No matter how much money it's coming in the business, if you don't manage, if you don't track these things, eventually you won't be able to thrive with this business. Sometimes you can be making a lot of money might be flowing in that business, but sometimes you find that also a lot of money is moving out of the business. Yeah, the fact that even a day's time you can make sales of 20,000, sometimes you find that also you're paying 30,000 in a day. So you made a sales of 20,000, and the money you are paid out is 30,000. So, and you find in this 30,000, maybe 15,000 is unnecessary expenses in this business. Like you've brought your personal expenses in the business. Yeah, that's why I've said you have to balance. And separate these things. So if you don't track your sales, your income and the expenses, no matter how much money you have coming in the business, it will reach a point where you find that the cash flow is now becoming negative, and now you have to go in your pockets maybe to cover some of the expenses in that business. You will reach a point where the business can't run its daily operation in a way that now you have to start operating on credit. You have credit from your suppliers. You can't be able to stock your business. You can't be able to pay your rent. You can't be able to afford the business utilities. Yeah, so it's about the management. So first you have to manage the cash flow and cut unnecessary expenses from this business, and also being able to calculate if this business is making profit. If you don't keep record of your business, you just do business blindly. Leo nimetengeneza 5,000 and nimelipa mtu wa nini sijui this and this and this and that. Maybe you like the thing you're looking at is the money you have in hand in the evening, but at the back of your mind you're not thinking about all the things you paid during the day. So in that way, you won't be able to tell if this business is making profit or a loss. The only thing you're focused on is the money you have in hand. Yes, and you can have a lot of money in hand, but that does not mean this business is making profit.
That does not mean it's profitable.
Yes.
Okay. Then is it good also on based on that to also for instance you have you made that money in a day. Let's say you're running a small business, you've made 1,500 shillings in that day. Is it good to take a percentage and just keep it for future in case you as a business encounter some difficulties, or you just say, okay, now I've made 1,500, tomorrow I'll go home, spend certain fraction of it for your personal things, you see, then come with the remaining back to the business, and then run those expenses the following day, and then the remaining keep it, and then again that day you make another one. What is the way or the standard procedure? Someone need to understand that I've made 1,500, where should I take this, put where, then this, do what, so that I'm able to
Okay, and that I think is where you're looking on the safety of your business. That means you have to have an emergency fund account. That's where you save a portion of your income when on during the slow months. As the way I said, business as is seasonal. There are green months and there are other months which the business is slow. So during green months, like you're supposed to have a portion of emergency fund. You save for that business when things won't be working. Yes, that way you'll be able to manage during the good season and the bad season.
Okay. Are there any warnings or signings for a business person to know you are running out of, or you are in cash flow troubles in the future?
You don't even wait for the future. It's the present you're living in. The moment you realize in your business, let's say for example, you find that the way you have said the utility, the cash outflow, the moment you realize you are going in your pockets to pay expenses in that business, you'll know you have a negative cash flow and something is wrong in that business. It's either you're giving your customers things on credit, right? It's the same way I say, let's say once you are calculating profit in your business, let's say in a month's time, your income, it's let's say 50,000. It's the total income of your business in January, right? And then the expenses of that month, it's 20,000, right? So see, in a month's time, your income is 50,000, and the expense of that month, that is after you paid rent and utilities and taxes, it's 20,000. But that means how much profit do you have? If your total income in a month is 50,000 minus the expense, which is 20,000, that means you have a profit of 30,000. So in this income you have made of 50,000, there are customers who you give them goods on credit, yes, and you owe these customers 40,000. So that means
you owe them
Yes.
So you have
Profit is the amount of money you calculate from revenue, you subtract from the expenses. Yes. Yeah. So you find that after you have calculated the profit, you have a profit of 30,000. But profit, it includes the money you owe. You don't have to have that money in cash.
Sure.
Yes. Let's say, for example, in my business, I owe you 20,000 for January, but you have not paid me, but I've sold to you goods 20,000. So at the end of the month, when I'll be calculating my profit for this month, your 20,000 I owe you. It's part of my profit, but you have not paid me. But at the same time, my business I'm supposed to pay expenses of 20,000. That means my business is making profit, but I don't have cash flow to pay for my expense. So I'm in short of 20,000. So that means I have to go back in my personal account to pay for this business, because you as my customer, you have not paid me. But when we look on the records, this business is making profit, but I don't have cash flow because I'm giving products on credit. So I think you are supposed to avoid that too. Yeah, the business, that's where we say the business can be making profit, but you have negative cash flow. And I've said cash flow is the main thing in business. You can't operate without money.
Sure.
Yeah, that means if you owe customers 40,000 and your profit is 50,000 in that month, what money am I going to use to restock this business? Because most of the money I'm making in this business, it's out with the customers. I don't have money to run daily operations of this business. That's why you're supposed to avoid credits in business.
Is it possible to totally avoid them?
Yeah, it is possible. There is something I've realized with business and customers. Don't be desperate. You see, there are customers who have audacity. They feel they are so entitled in your business, and they think like you're supposed to kubembeleza them to buy from you.
Okay.
Yeah, the same way you find that you're running a business, and then I tell you a tray of eggs is 390, and then you come and tell me you can sell for me at 370, and then I tell you no, I've written there, like you can see it is 390. So you are like, okay, kama uniuzi 370 wacha niende. And then at the back of my mind I'll be like, I don't want to lose this customer. Let me just sell for you at 370. On my side I'm making a loss, so that I can keep you. Yeah, don't be desperate. Set standards in that business. Wakufika atafika
na wako.
Yeah.
Sure.
At the moment the customer realize you are desperate to make those sales, they will take you down. Yeah, as long as you're confident about what you're selling or the service you are giving out, set those standards. Don't be desperate. Yeah, because you'll be desperate and will make losses at the expense of that customer.
Okay.
Yes.
And now let's just come back to that statement. Now you have to set those standards. At what point would you compromise? Like, okay, as much as anataka ile 370, there is a can we negotiate akuje 380?
Yeah, that's where you can negotiate with the customer. You meet in between the middle, but not where the customer is
ameset.
Yeah, ameset ama amekufinya, but now you, because you want to sell, you're like, let me make a profit of 10 bob so that you'll make that sell. You're not doing any business there. Yes.
Also on the same, they say in business, customer is your boss. How true is the statement?
I'll say that's 50-50.
50-50.
Yeah, that's why I've said that thing of sometimes saying, I think some customers go overboard as far as the customer is the boss or the customer is always right. Some customers will push you to the edge. Like they want you to be desperate for that money they are giving you. But this is like barter trade. You're getting my product, you give me back money. It's not like no one is doing anyone a favor here. And as long as I'm confident of what I'm selling, I don't think we are supposed to have a problem, because I've set a standard price depending on also what you set prices depending on how much you have bought for. My supplier has supplied me that product, so if the prices I'm buying are low, that means I'm supposed to lower my selling price. But if my supplier, there is inflation every other day, so if the prices go up, we go up. If we go down, we go down. So I don't know, there is a line in between.
Okay.
Yes.
Is it also good to go look at the market price for whatever, as much as you are selling them from, you are buying them from your supplier who is setting a particular price? Is it also very important that to the market you are operating in, as much as I'm buying 350 for instance, and I want to sell 390, and then the market, there are people who are not stable enough. There are places they are buying or selling at 360s maybe. Maybe they are also getting them from different customers. And how then do you negotiate and balance between those already your competitors and match up with the demands of your customers and set a standard price where now you will say, at this point, I won't negotiate. Even if I negotiate, I have to still be in business. Yeah.
When you're doing business, I think even for unga, this brand of unga, you find that the market price is ranging. If it's 180, with there is a market range for every product in the market. So once you know what you're selling and the current, the way I've said, these things they fluctuate every day. Today you can buy a product at 100, tomorrow it's 120 shillings, you see. So every other day, as long as you're in business, you have to keep track of the market price of whatever business you're doing. That way, even high as I'm negotiating with my supplier, like I will be talking from market price of this product you're selling me, it's now at 400 shillings. So that means you can't supply me this product at 380, 370. So we have to go low so that I can make my profit and also be on the same market price range as the other people who are doing the same business. So you have to know the market price range of whatever you're selling. So that way you will know how to negotiate with your supplier so that everyone makes profit.
Thank you. Let's move to this another part that is also very important to come to cash flows. We said one source of cash flows is loans. Most business people do not know how to leverage loans or debt to work for their favor. Instead, they enter into debts, and then finally you find a business is struggling. How important is it for one to know that having a loan for your advantage is good for a business operation? So that every time you feel like the business has gone down, you can run to someone, get some money and stock up again, and pay in time so that you're able to run and monitor your business and then come back again if you go down. Some people take a loan, misuse it, do some things with it, and then they finally come back and even they are not able to pay back the loan. How is it important to leverage your ability to take debts in business and pay on time and be able to run the business?
Okay, my own opinion. Okay. Yeah, I'll say I just try as much as you can to avoid loans.
Try as much as you can.
Yeah. A loan is a liability which can drain you mentally, even financially, and sometimes even kill you in that business. Yeah, because sometimes I feel like people, I'll say sometimes you apply for a loan. Let's say you want to start a business and you don't have capital for that business, and then you opt for a loan to start a business. And then you plan, you have a good plan, you have good strategy as far as that new business you want to start is concerned. And then you come and start that business with a loan. And let's say the business does not work out. or it does not make profit, the way we have said, you start a business and you have to give it a grace period before you can tell if this business is making a profit or a loss. And once you take a loan, you're supposed to start repaying the loan immediately. You have taken a loan of 100,000 and then you have invested all that money in that business, as many people do. You find that you don't have operating income, and now you don't have actually any other source of income. So you've taken loan to start a business, and you're also depending on that business, and also it's the same business which is supposed to pay for the loan. You see that in that way, if the business does not pick and it has a good positive cash flow instantly, it's going to be bad for you. So sometimes I will say, if you're starting small, you just find a way to generate a small amount of something. Start small and watch that business grow, rather than rushing. And the thing with business, you can start big and it goes down, but you can start slow and that business grows with time. As long as you manage it well, you have financial discipline, you keep track of your daily operation in that business, it can grow even without having to apply for loans.
There is this part or this statement we have repeated time and again in this whole conversation: the financial discipline. In what aspects of our business does this discipline really need to apply? Like, what are the aspects of financial discipline in a small business scenario? And the owner of a business need to looking at those things or those aspects of financial discipline. Because if you asked me in a small business and you said, how disciplined are you? I will tell you a whole story. I don't know exactly what are these things I need to look at, so that I'll be sure that if I manage these things properly, they will amount to certain mass financial discipline in my business.
Okay, that will be on how to manage or improve your cash flow in that business. So your number one is you have to track your daily sales, your daily operations, and keep records.
So number one, keep records.
Track your business. Track whatever happens in your business every day. Any single cent which is coming in and which is going out of that business. Sometimes you find that you can take 5 bob from your business, and you are like, it's 5 bob. You can't have 1,000 without that 5 bob. That 5 bob is a cash in that business. It's going to make a difference at the end of the day. You take 5 bob today, 5 bob in the evening, 5 bob tomorrow. It's going to amount to a certain figure.
Huge.
Yes. So you are supposed to track every operation, every cash, every activity which is happening in your business. Another thing is reduce credit. I've said, avoid credit in your business, or shorten the period on the customers who you deal with them on credits. Reduce them from maybe 30 days to 15 days or to 7 days or something. So you find that at the end of the day, you can be able to calculate the profit on your business without having money outside the business. Yes, another thing is control expenses. That's where you negotiate even with your suppliers. You negotiate the prices they are supplying you at. That way, if they go low, you'll find that at least the profit margin it has increased. Also negotiate with your landlord for rent.
For rent if possible.
If you have salaries you're paying, you negotiate with your employees. Unaambia sahi biashara iko chini, tunawalipa 150. Yes. So that way you reduce expenses. That means the profit margin goes higher. So another thing is you also clear the slow moving stock. The way I told you earlier, sometimes you find that you have restocked things which stay in your premises for even more than 3 months. and they are not moving. You can decide, as long as you make even it's a profit of 20 shillings, you clear those things on discount. Yeah. So, and another one is save a portion of income for slow months.
A portion of income.
Yeah, always save.
Oh.
Saving makes you feel safe. Yes, you know when things go south, you have a backup plan.
Okay.
Yeah, and as long as you save, that means when the months when the business is slow, you don't have to opt for a loan because you have emergency fund for the business. And also, in conclusion, I'll say the fact that business is making profit does not mean that business can be in operation, because as long as you don't control your cash flow, that business is going down.
Yeah.
So make sure you balance these two. Yeah.
That's wonderful. Lessons to learn today. Nataka to there's someone listening to this conversation all around this issue of profit and cash flows, and maybe just wondering, it can be a rule, like one that governs the issue of cash flows. Like somebody, like I know there are so many rules in like hii yenye tunazunguka tukisema, if you can avoid, like you said, if it's possible, avoid giving things on credit. That's a very important rule. Yeah. So in cash flows, you have to, the rule is the bare minimum is always work to have some cash in your business. Yeah. Is there any rule like you can just apply to that line to help one as he is operating? He's always aware that, okay, as I do this, I should never go below this line. A rule that governs cash flows in business.
I don't think there is a rule that governs cash flow in business. The only strategy you are supposed to use is how to make sure that business will always have cash flow, and you will achieve that through what you have talked about on the improving that cash flow. Yes, like going for the fast moving products and cutting unnecessary expenditures, and also saving for the slow months, for the season when there is inflation in the market, in the economy. Yeah, that way you'll be able to manage and make sure your business always has operating cash.
Okay.
Yes.
Thank you. I would love to hear your parting shot to someone out there who's in business, started, and is facing these challenges of those two things we have spoken about. How would you advise a person in terms of managing cash flows and profits?
Come up again.
Any parting shots, any advice you can give to someone who's struggling to manage the two? Yeah.
Okay, I think the only problem most people have, it's as business people, we don't keep record. The moment we'll start keep record of your business everyday activity, that way it will be easier for you to know like where you're going short of something, or what you're doing wrong in that business, or the what activity or operation in that business which is draining that business. Yeah. So I'll say, no matter how small your business is, make sure you keep a record of everything that is happening at the end of the day or at the end of the week.
Okay.
Yes.
So record keeping is king.
Yeah.
Okay. So thank you so much for listening to this episode. Today we have in this show learned pretty much about cash flows and profit. The information is crucial. Please watch this on our YouTube, Joseph Haemba podcast, and enjoy. Also, don't forget to like and subscribe.